Hey everybody, hey traders, Chris Pulver here. This is going to be a video update for my final hour session today. I will be on the road and out of the office, so I'll just be monitoring some positions from my phone. We are watching some key levels today coming back into this 5900 handle, so I want to go ahead and jump into the charts. But this video will be posted in premiere on my YouTube channel, youtube.com/Chris Pulver and youtube.com/Financial Wars at 3 p.m. Eastern Time. So we're coming back down into 5900. I do have a good looking butterfly spread on that side. So here is the 5900. Right now it's up about 80%, getting over 100% here. Let's see if we can get this thing into a nice little winner. So this butterfly is paying as well, or getting close to it. Obviously it's a little bit wide on the spread here. I'm trying to go after something. So 59, 59, I'm looking for my average levels here. So I just got the debit. Let me see if I can close this thing down. So can we get this thing for like $1.50? That'd be a just over 100% winner. Shooting for it. I mean, it's getting close. We're at 59.03. I've got the pin price at 5900. I mean, if so I'm going to be on the road here. If I want to get really gutsy, I could just let this thing cash settle at the end of the day and just see what happens. But that's not a very responsible way to trade a butterfly. So let me see if I can get out of here for just over 100%. Try 145. Not filling. Let's try the 140. That's 100% gain if I get it. Just got filled for 100% gain, so that was not too bad. And then this butterfly spread is also looking better. So this one's up 50%. Let me see if I can get this one to work out as well. So I don't have a take profit on this one, or do I? 50 cents, 75. Okay, so I've got a $5 credit here. I paid 50 cents for it. Right now it's trading for about 90. Let's try 90 cents. Oh boy, it's getting better and better. Okay, we're making a nice little break for it. There we go. So let me modify this $5. See if I can get this one to pay $1. Let's try to go after the hundo if we can. So $1 credit not filling. Try 95. I'm doing this a little bit early, but this market is dropping pretty fast, which is pretty good. I guess I could sit here while I'm doing the video and see if it'll trade out, but I'll try to go. 95 is pending. Let me try 95 here. So not filling at 95. Prices are falling towards my strike at 58.75, so this is all good. And let's go replace. Try to get 90 cents. Come on now. I'm only about 17 points away from my pin price. And it's 10 wide. I mean, I should be able to grab a little bit more than just a few cents, There we go. Just got filled at 90 cents. So, okay, net on the day, I just grabbed some profit. I need to update this for some of my services. So give me a sec here. So the SPY, that's going to be a loser on the upside. But okay, so double up. Trade management. SPX. What entry was that? So that is going to be entry 95. So SPY, trade number 95. SPX, put fly, which was a 5885 buy put, and a 5775 sell put, and a 5875 and a 5865 buy put. So entry was 50 debit, closed for 90. But right now, yeah, I'm gonna close that for 90 and call it good. I'm getting out early. I'm gonna put this here. Note: I'm closing now to take profit and protect. If you're willing to hold for today's close, price may bounce around between 5875 and 5900. I'm taking the win. Okay, so net, this has been a pretty crazy day. We had a nuts day in the daily profit play. I went a little bonkers with my trade, although it actually would have worked out just fine just doing what I initially did this morning, which was I put on some put spread combos. So I'll highlight that here. So I put on put spread combos looking for price to go up, and I expected us to see maybe a gap fill today. So we just came shy of this gap. Literally just shy of that gap, and you can see the market is tanked. I was watching this morning as well, and I said this 5,900 level is so critical that if we break it, it is pretty open to the downside. So right now, I think this market can fall pretty aggressively, and we could give back a lot in a very short amount of time if we're not careful. I don't know, what exactly would be the catalyst. Is something going on right now, whole downturn, but are they? It's like this market just turned in the last, look at this chart. 1, 2, 3, 4, 5, 6, 7. We've got 30 minutes of aggressive selling here, all the way down to my level that I called this morning at 58.75. So my daily profit play, let me do a quick update here. Trade updates. I have 2 butterfly put spreads that I'm closing for profit. One entry at 50-cent debit. It would have been, I guess, the pin at 5,900. And then the pin at 58.75. That entry was pretty inexpensive, I think. Yeah, that was a 50-cent debit. So 50-cent debit, closed, 90-cent credit. And then this one here, the 5,900 that I took, that was a 59 for 70 cents. So entry was 70 cents debit, closed, $1.40 credit. So return on each one of those, so that's 100%, and then the 40 out of 50 is an 80%. So that's a 80% winner return on risk. And this one is 100% return on risk. Net trading for the day, 55 cents from DPP session this morning. Plus 40 cents on butterfly and 70 cents on butterfly. So net, not bad, $1.10, $1.65 total profit for the day. Okay, so a lot going on there, and honestly, I'm kind of happy I can do this now, get this video out and posted. If anyone is wondering, like, what else do we do? It's like, well, I'm going to be on the road. There's very little I can do outside of hope this thing settles in. But to me, that's way riskier. It's like I'm basically wasting $100 if I don't manage these trades. And also, there's a very good chance that if we just keep falling to the downside, those butterflies are still worthless. So the one trade that I have running right now is a hedge trade that is in the SPY, and it's right here. I have a bear put spread in the SPY. We're at 586. It's now starting to show some profit. So this 590 by 580, which is also in my double up service, that's looking pretty good for a win. So let me go here. Let's delete this line. So delete. Okay, so that 50 closes for 90. That was going to be worthless. I'll take the winner there. All right, so this 590 by 580, I basically did a debit spread that's pretty inexpensive, looking to see if we can fill that U.S.-China trade war announcement gap. It's not trade war announcement. It's just that they're coming to some agreement. So here's what I'm looking for as far as the gap goes. This is SPX, but if we go into this level of support, the 590, which is roughly 5,900, trading down here to 5,800, all I need to see price do is get down towards that level. If we fill the gap, then there's a good chance I can take the full, $9.50, almost $10 credit. I paid $3.78 for that debit, and my max credit would be $10. So that does offer up a pretty good reward to risk. That's more than 200%, I believe, if I can crunch the numbers on that. So if we did 3, and I don't think I'm going to make, I don't think I'm going to make the full credit. If I max it out where it's below, 580 by expiration on the 30th of May, that would be 10 minus 378. That'd be 164%. So that's my max return on risk, which again, I'll take it. I think that's still pretty decent. And just like that, while we're trading at 58.65, so we're even through the butterfly. Aggressive, but that's why I put on that hedge. That is a hedge. I mean, market's dropping. My support levels, my gamma levels, big drops here. My support levels, I mean, I was watching this morning as well. Look at what's lighting up. We're now getting like a 585 on the SPY. That just came out of nowhere. Nope, that's actually a monthly. Wow, that's not even intraday. Let's go SPX. Big level right here, and we struck it. So that was another monthly level, 58.68. Look left on this chart, gap territory around 58 down to 56.80. So honestly, I'm a little thankful that we're getting some downward pressure, because I'd love for this to be falling a little bit lower, because I want to start adding in some more trades for waterfall. I want to start adding in positioning for some more option trades, some ratio spreads, some 1-1-1s. I'd like to see if we come back and fill this gap. So it's probably all not going to happen today. I'm curious if there's a catalyst for today. Let's see what's going on. Let's go heat map. I know I'm jumping all over the place here, but here's what the heat map looks like. What else? UNH is down, Google's up, Nvidia's up, Microsoft, Apple down, Tesla, Amazon down. Okay, no big deal. I mean, what's our advanced decline today? We have 67% of stocks down today, 28% advancing. So it's a bit of a bear slide. Obviously, it happened very fast in the last 30 minutes on the index, and I'm totally fine with that. So let me set a chart alarm here at 58.05. So we'll go to 58.05. This will be close to touching U.S. China announcement gap. There's the trade gap. So I'd like to see it come back in, at least test it, if not fill it. I mentioned in my my Telegram over the weekend. I think I posted this video on Sunday. I'm going to go back a little bit here, but I posted a video. There it is. I posted this video on Sunday. 3 to 5 to 10% pullbacks, but still bullish on the S&P. So if you want to check out that video, it's 15 minutes, but I posted it on Sunday as a little bit of a heads up of like what we could be facing this week. So far, getting what I wanted, which is I want to see a pullback. It was a little noisy today. Here's a 50-minute time frame. You can see some pretty clear support right around that 5,900 handle. This is SPX. So some pretty clear support right there, and it's nice to see price has broken it. So we are now down below. I mean, that's wild, right? I grabbed the profit there and a profit there, and it has blown through both of those levels, but I still turned in 80% and 100% return on those little butterfly spreads. So I'm glad that I managed it now, as opposed to if I got to sit and wait, like, does it come back later in the day to get that, if you're familiar with the butterfly spread, get the profit trap, but you have to wait until the end of the day to get that profit trap. So the fact of the matter is these are both out of the money spreads where I took the trade. I'll highlight this again. So basically when price is up here, okay, when price was up here, I saw a key resistance level around this 59.40 handle, and it was 593 on the SPY. So I did take a chance. It's very cost effective. I put in a pin price right here on a butterfly spread, and I also had one at 58.75. So it's out of the money. It was very cheap, 50 cents and 70 cents respectively, and had a nice return on both of them. And price, I mean, what's price going to do now? This is an aggressive candle, right? All of this chop that's been happening is now quickly evaporating. Okay, and the good thing is, if there's momentum here, I hope this momentum takes us and drives us a little bit lower. We come back into this gap. This is the area that I would say we can start looking for buy opportunities. Again, that's a shallow dip. That's a shallow buy, because we might not find a big Y today. Look at this thing just dumping. Wow. So this is aggressive, and I'm prepared for it. I mean, heck, it's down 1.44%. I'll go to live news feed. Do we have anything in live news? Maybe we do. If we don't get it up on the website, I'll check my Discord. Wall Street concerned about the blooming deficit threatens America's status as a safe haven. I mean, we did see fresh lows on the bonds today. U.S. budget deficits could go from stock market friendly to faux. That's very true. Stocks tumble, yields start to weigh on the equities. Duh, we've been talking about that for frickin' a year. Okay, this is all, I don't know, the last 15 minutes or so. But, why U.S. budget deficits could go from stock market friend or foe. Bitcoin hit all-time highs today. We'll see if that's turning right now. I'll turn this stock over here. Let's go to, okay. So intraday, we had a pretty nasty sell-off. And, maybe it's contained a little bit today. Maybe the market ends up going down aggressively. But I would look at this level. If we break this support right here and we pull back to that support, are we going to fade a little bit lower and try to revisit? This is the U.S.-China touch of that trade gap, right? So again, could be a lot of stuff going on here. It's pretty fast and furious when the market's dropping intraday like this, but that's also why I trade, opening bell to closing bell most days, because if I've got something I can take an opportunity to play, then I try. So that worked out pretty well. All right, what else? I'm still watching that SPY trade. If we go from 590 to 580, I want to see, there's my levels back in here. I'll just set a chart alarm at 580, and all I'm going to do at 580 is if we hit 580, I'll even put 580.50 if we get close to it. Check, bear, put, spread. So I took that trade during the final hour session. I added that to my double up service. We've talked about hedges. I've got a crash insurance masterclass. Again, market was kind of caught flat-footed, like that's a big drop, and we're kind of ripping back here. I just wouldn't be terribly surprised if the market comes up and bounces here, and then it comes back and retests the lows, or it is, back up and it kind of flounders around, because that is a pretty key level that just, is now what hopefully is going to be resistance. So I'm hopeful that at least a pullback would be nice, because if you want to buy this market, I'd love to buy some dips. If you want to sell this market, you're taking little tiny stabs at it. And today we finally had some follow through. All right. So anyway, let's talk big picture for a second. Let's see what's happening in currency land. So we have the Japanese yen screaming higher. We got the dollar getting weaker. My euro dollar has been doing quite well. Euro dollar is now up about 157 pips. I bought this thing around 1180, and I'm looking to average in at 108 and change and 106 and change. If I don't get a pullback here and it just goes straight up to 1500, then I will eliminate these pending orders and I will close out at the profit target for me is around 1550. I just want to see if price can come back and revisit the highs. Okay, dollar index has broken the trend line. Don't be surprised if the dollar index does try to retest the lows, but if it does retest the lows and go a little bit lower, that could be a bear trap in some oversold conditions with divergence. So I'm not, aggressively shorting the dollar. I mean, look, you had months to short the dollar. You had much better entries when this was a bear flag. That was a great trade right there, right on 104. Okay, selling the dollar now. I mean, the only trade I really like is euro dollar. I think Aussie dollar if you're willing to scale into it, New Zealand dollar if you're willing to scale into it. But if we go into risk off mode, Aussie and New Zealand are vulnerable when it comes to risk off trading. So Japanese yen getting stronger. I talked about this morning in some live sessions. We could have a big trade on the dollar yen. And that would be this. And I don't know if it's going to break the floor, but if we break 140, this is a measured move. So you take high to low, okay? And if this is a head and shoulders, the measurement is the break of the head and shoulders. And that puts us down to about 120. That brings us back into this inefficiency back in 2022. How am I trading that? Well, I'm not yet, because I don't know if this is going to actually break the floor. And if it does, I'm certainly not just going to assume that the dollar yen is going to be, flowing like 2,000 pips to the downside. For this reason, I do have other positions that work with this. So FXY is my dollar yen position. Basically, it's just trading the Japanese yen with strength, and so I own shares of FXY. I don't pay negative swap. I just buy this instrument, and I've owned this thing since about $59, and it's up, $5 a share. It's nothing crazy. It's nothing big positions. But if we break, this is what's kind of nice. You can already see the measurement that I have. If we break this high, that would be a head and shoulders. There's my measured move. So I go from a $59 ownership up to around $74, $75. That to me is a good gain, right? Like that's turning this thing into a pretty respectable winner of about 26%. Okay. So that's how I'm trading the Japanese yen. If you wanted to take that into Forex and go dollar yen, have daily structure where we're below the 140 handle, great. Then go to a smaller time frame like a 1 hour chart and try to find alignments, right? You go dollar yen 1 hour chart or lower, and what do we have? Well, if you want to short this, right? You short confirmation, and any pullbacks you sell it, pullbacks you sell it. You're looking to stay above the moving average and see if this thing will just keep going lower. So there are ways to participate. You don't have to have like the perfect trade, right? Okay. So currency strength, a little crazy. It's still not high on the volatility scale today. I mean, 60-40 is nothing too bad. Here's intraday price action. So a big drop. I mean, that was 1.4%. Is that right? 1.47% in 30 minutes. So what does the market do from here? It's possible that we just come right back into this noisy spot, right? But if we pull back to this level, I'd say for the bulls today, the bulls should try to close above this 588 handle on the SPY or above 5,900 on the SPX. If the bulls can't close above 5,900 on SPX, then I think we have some open space to still trade lower for the. I'm not going to say like tomorrow. I'm just going to say for the remainder of the month, it wouldn't surprise me if the pressure is to the downside, right? Why? Because we have ridiculous gaps. We haven't really had anything fade that April 9th low, that April 9th bottom that was put in. Like April 7th was the bottom, April 9th was the Trump tweet or whatever, and the market ripped like crazy. We had one pullback, and then after that, it's been nothing but a melt up. We've had no pullbacks, and we blew through major resistance by about 3 to 4%. So this is where the bears are showing their teeth a little bit, and man, have they been patient. But if the bears are going to step in, it's a good time to do it. So I think it's kind of nice to see. Hopefully we'll come back to that 580 level, maybe a little bit lower. And like I said in that video I posted on Sunday, let's just go bigger time frame for a second. Okay, 3 to 5 to 10%. Just measure it. I'd still be willing to buy the market if we pull back from these highs. Oops, not a fib. Sorry. We pull back from the highs. A 3% pullback. That's the U.S.-China agreement gap. So that's 3%. Okay, cool. Give me a 3% pullback. And I'll look to maybe position for it. If we fill the gap, now we're talking closer to 5%. Okay, I'm okay with that. 3 to 5%, I'm okay with positioning, right? If we pull back deeper, we still have a gap here around 6 and change. We have a gap back here around 10 to 11%, right? I mean, so 3 to 5% is this shallow area, right? Which would be fine. 3 to 5% pullbacks in a volatile environment should be no problem. A 10% pullback is a gap fill, and also potentially 12 to 13%. And I don't know if that's going to be like, oh boy, here we go, retesting the lows in April. Maybe, maybe not. All I'm going to do is just take little bites, take little nibbles. But you go and zoom in, it's like, what is price doing now since I've been on this video? It's been wild and crazy. Wild and crazy. Like this is down 1.47%, and it's already ripped up probably over 0.5%. Yeah, it's already up 0.6%. Like that's a lot of noise in an intraday market. A lot of noise. So we will see what happens. Bond yields explode, deficit fears mount, geopolitics rattles. I mean, there's your why, I guess. It's like everyone's grasping for it, but I'm trading it. I'm trading real time, real price. And, I've got my levels. I was watching, and I thought that 5,900 today would have been a cheap enough way to trade it. So I did, made me some money. 58.75, even cheaper, made me some money. If we go lower, I've got that 590 by 580 debit. Great, makes me some money. What does that help me do? Well, if we get some pullbacks, I mean, I'm going to see some red when the market's down. That's fine. But I can position for, I'm going to have some hedges that are still running. They're still active. And, everything in the futures market outside of this copper trade is a hedge. So I have a hedge on Russell. I have a hedge in the S&P. This is micro S&P. And those are essentially like $500 risk trades for making $3,000, $4,000, $5,000 to the downside. And, how do I get paid on those? If we go down towards the April lows, these will pay extremely well. They'll probably play close to, 8 to 1, 10 to 1. I've got a couple, like the ES trade potentially pays out 40 to 1. So they're there if I need it for this entire portfolio. But otherwise, I'm just going to look to kind of use this as an opportunity to trade options, generate positions that I like for income, allocate some of the capital that I've been building here the last couple of months as I've been taking a lot of profit through that March, April decline. And once we had this melt up, I've taken a lot of profit. So it's good. I'm actually not upset by the market dropping a little bit today. But you can see, again, quite reflexive. And watch price action. There's your low. If price goes up and rejects, let's see if the market's going to continue to sell off today. So let me see if I'm getting any more levels lighting up here. I don't have anything to the downside. This big, like 58.75 was a big level here. It might oscillate around this, but if we have continued pressure mounting, I'm really curious. Like, does it just continue to go lower? And if that is the case, first thing I'm going to look at will be my SPY trades. I'm going to look at my SPY, and what is this? That is a wide credit spread. Okay, fine. This trade's going to be worthless, no big deal. There's my bear put. These are all my bear puts. So right now, they're about break even, but these expire going out to next week. If we push down to 580, even the 578, 575 level, these should start showing us a good profit. If I can get, 100+% return here, I'd be pretty happy with that. I'd obviously like to make more. But timing-wise, I might have a little bit more on the timeline than I can get with the full spread. So here's an example. Let me show you what this looks like from a strategy standpoint. Let me see if I can find this trade. So if I go to save trades, I'm not showing. It's only saving 5 of my spreads. What the heck? All right, anyway, let's build this out. So I'll just go back to build. We'll do a bear put spread on the SPY. So this is a May 30th expiration. So May 30th, and I'm selling the 580 and I'm buying the 590. So that's my buy at 590. So that's my trade. Okay. Current volatility, SPY for the 30th, we're looking at about 16.8% IVX. So right in there. I mean, that's the range trade. Here's what I want to check. Look at today. This is what it looks like right now. Right? Like there's still a lot more to go. I mean, if price drops lower, I mean, I'm getting kind of max profit here. If price is down to like 560 or 550, then I can max this thing out really early. What's nice about this tool from OptionStrat is, this is right now. Like we're trading around 585 or so. I'm really not making a bunch of money on the trade. But if I go out to, let's say, Friday this week, let's go Friday end of day. Okay, Friday end of day. Well, if price is around 580, I'm going to see about $100 of profit. Okay, and I have to make a decision. I can either, one, hold out hoping that we're going to stay lower than 580 for the next week or so, or I take the profit. Because what happens if we tap 580 and then we go up from there and this market doesn't actually fill that US-China gap? If we go down a little bit lower and we actually fill the gap, which would be what price? What is that price if we fill the gap? The gap fill would be somewhere around 570. We fill the gap to the actual day before it gapped higher, that'd be 565. So, I mean, if I'm trying to hold out for a test of 570 or a test of 564, that looks a little bit different. So if we get to, look at the price here. Okay, if price, I'm looking at this top number, if price is around 570, that should be enough to offer up about $400 of profit on this trade. So the faster we go, I'll still have some profit on the trade. Okay, but we'd have to drop to about 570 to make that look good. If we get down to 564, I'm nearly at max profit. And that could be as soon as like this week. Okay. So it's encouraging, but more than likely, I'm not going to hold this trade all the way to the 30th, because if it does find 580 or 575 and it bounces back up, I don't want to forfeit any of those, those good gains. And I'll just accept that it's partial profit, but maybe I can get about 100% return on capital here. I paid 378 for it, so my max loss is only 378. But anyway, for today, before my voice officially goes, this is ridiculous. This is what I'm watching. So I'm going to be on the road here in a little bit, but watching to see where the market finishes. If we are down and we're like oscillating in here for the rest of the day, that could very easily push lower tomorrow. Okay. If we are back above this level by the end of the day, then this is just a noisy decline. So it really is kind of a key level for the bulls to either stay and try to hold this melt up, or the bears are like, okay, man, you've had fun. The bulls are struggling to make higher highs, and then the bears, since this top, lower highs, lower highs, lower highs, and it's been a pretty good read. So I hope we at least come back and try to find that U.S.-China gap, and then we'll start talking fresh positions. So, all right, I've been going for about a half hour. Usually my final hour, I'm doing this for the full hour, but I got to get on the road here in just a few minutes. So I'll get this process posted on my YouTube channel. That is youtube.com/Chris Pulver. I appreciate everyone watching. If you're not subscribed to the channel, it's free. YouTube.com/Chris Pulver. Subscribe, click the notification bell. We go live almost every single day at 3 p.m. Eastern time. If I'm a little bit late, it's because I have some webinars scheduled before that, but usually by 3 p.m., 3:15 p.m., we are live every single day. Telegram, you can follow me. Discord, you can follow me. And just